All right. Hello, everyone. I guess everyone is trickling in, as we used to say back in the physical world, but it's instantaneous now. Hello, hello, and hello, Ryan. Thanks for
Hi,
being with
everyone.
us.
Thank you for having me today. Excited to share what we've been working on. Emre and I have been, going back and forth on a lot of ideas, and I think we have an incredible opportunity to demonstrate something really powerful for the community today.
Indeed. Yeah. So maybe first quick introductions. Hey, everyone. Again, my name is Emre Tekisalp. I work on business development and operations over at O1 Labs. And Ryan and I have been waiting for this moment for a long time because we've been working on this since maybe almost a year. So yeah, Ryan, do you want to introduce yourself and what Teller Finance is all about?
Yeah, absolutely. Hi, everyone again. Ryan here, founder and CEO at Teller. Teller is a money market in DeFi, just like Compound or Aave, where lenders can deposit assets and earn interest. But borrowers, on the other hand, can connect real world information, be that bank accounts, credit information, even something like payroll, and use that data to get access to under collateralized and unsecured loans in DeFi. What's really exciting is that we start unlocking this idea of capital efficiency in DeFi that to date is only seen in the traditional finance world. I can go into some detail about just how Teller works and the data world of finance, if that works, Emory, as we tie this back to privacy and everything Mina's working on.
Sounds great. Yeah. So when we first actually got connected through a mutual connection, I was super excited because this is back in last summer. We were initially, thinking through the snap designs, and we were thinking through some use cases based on all the amazing technology. And having been through some of the early DeFi designs, I was thinking, wouldn't it be super cool if this could enable an unsecured lending product? And we met, and you guys were building exactly that. And it was, I guess, they say love at first sight between the first two products. And so yeah, I would ask then that, Ryan, maybe why don't you go through the integration? And I'm going to caveat this all and say, as demos go, we hit a small snafu, and some of the demo dependencies on the local machine failed. So we saw this is an actual live working demo. Both teams, I guess, have been working on this for a while, but unfortunately, this will be more of a click through. But I believe the Teller team is looking to make this public in the coming weeks as well. So yeah, Ryan, why don't you take it away?
Awesome, perfect. I'll start with a little quick intro on how we see data fitting into DeFi. So I know that's always of interest, and I'll go into the demo if that works. Sweet. So what we've always wanted to see in DeFi is what is the basis or foundation of traditional finance, which is data and risk assessment. But as everyone knows, data on-chain is public, and no one wants to write their actual financial history or credit history on-chain. They want that to be private, but they want to get use of that data in DeFi in the same way that they would in the traditional markets, whether it's through a mortgage, a credit line, insurance, etc. So today's DeFi is limited in its use cases. You can have over-collateralized loans that you can use to leverage trade or just not sell out of your crypto. But really to unlock the next world of DeFi, where we start merging into what is currently seen as purely traditional finance, there's one real entry point, two that we could really name, but one big one, which is on-chain data or off-chain data that's starting to port on-chain, that starts enabling people to get access to credit. And this is where this partnership with Mina comes in that's really huge, is privacy. Privacy is going to be at the root of any data that is going to be ported and used in DeFi. Without privacy, people won't even use these applications. And I actually think it's funny how much we're willing to share with centralized institutions, trusting that they will take care of our data, when in reality, it's an opaque black box. So the beauty of what we're about to demonstrate is this privacy-preserving local machine. The idea that data can come from any API, any endpoint, and what we're going to show you is credit data, which is extremely interesting for DeFi, be run locally and have such a tight data integration that the data never leaves a user's machine. This is what we think is one of the most powerful things for DeFi that's going to accelerate us into not only merging, but also starting to look and feel like traditional finance. So with that, I'm going to go ahead and share what we've been working on. Let me make sure everything is loaded up correctly. Yes, it is. And we will break it down into how it works specifically. This is the general view of Teller. Borrowing from Teller is meant to feel sort of like Rocket Mortgage or getting a loan in the traditional space. There's 3 different types of loans you can access. One is your classic DeFi over collateralized loan, where you put down 135% plus of collateral and you can get money that goes directly to your wallet. The second 2 types are under collateralized and fully unsecured. In order to access under collateralized, you simply need to plug in some amount of collateral. And connecting credit or off-chain information will give you better access and better opportunities, but it is optional. In order to unlock an actual unsecured borrow or loan in Teller, it is mandatory to connect some type of off-chain information. We have interesting ways to open up access that can be spoken of later through the use of NFTs, but for this presentation, we'd like to just focus on the actual merging of data and data privacy. So I click on unsecured loan, and in order to take out an unsecured loan, I have to understand that to date, the use case is for DeFi specifically. So already whitelisted to the protocol or apps like Compound and lending protocols, we'll be adding more in the future. So that when you want to access money in DeFi that you don't necessarily have, you can use credit or banking information or any off-chain information to make that happen. So I'll click next, and this is going to take us to the actual borrow form of taking out an unsecured loan in Teller. You can see the asset that I will be borrowing, the loan size and DAI, and the loan terms. So there's currently 2 places that I can connect information. With this demo, the bank account and the credit score. Let's just assume that the bank account is connected. We have an integration with Plaid, which supports over 2,000 plus financial institutions that data can be aggregated from. Whether that's Chase, Bank of America, or places in Europe or Canada, there are many different forms of institutions that can be supported and where data can be ported into Teller. The other is your credit score. What's extremely fascinating about our integration with Mina is that any data, any website, URL, API endpoints can actually securely tunnel and encrypt data so that we can prove the data is authentic from a website. So integrations can actually be driven by community members that want to just have a new type of data that gets poured into a risk assessment. I'm going to connect my credit score here. And as you see, Mina it pops up with the ability to upload our credit score. So in order to do this in this version, there is actually an app that the user would download on their local machine so that all the data and everything that happens with the information truly does stay local. There is no back end. If I want to upload a proof, I click on the proof. This takes me to the actual Snap credit check itself. Now, while this is a rudimentary demo, you'll see the power of the merging of this Mina's technology stack with zk-SNARKs and privacy preserving data with the ability to take out the loan in Teller. Here you can see the information that will be added. So what this does is actually directly talk to Credit Karma with the demo. I'll enter an Ethereum address, what will be receiving the funds, my email from Credit Karma, and my password. And then, of course, this will be more hidden to the user, but showing where I want the actual credit information to go on my local machine, as it doesn't go anywhere else. I start logging in. Here's my Ethereum address, email for Credit Karma, login, great. And in this demo, I am a Canadian user, a resident. So I want to click Generate My Snap Proof. This is going to do 2 things. First, it's logging me into Credit Karma. And you guys can see on the bottom, right below the Generate Snap Proof button, that I'm logging into Credit Karma in Canada. What's amazing, as I said, is any website can be treated now as an API endpoint where data can be gathered and simply and purely given to the end consumer. So your data is your data and it remains local. Once I'm fully logged in, then we actually start generating the Snap Proof itself. The Snap Proof will take about 15 to 20 seconds to generate, and it's going to include my Ethereum wallet address, the login, maybe not the login, but the data itself, and where it's going to be stored. So it truly is a unique generated proof for that specific timestamp. What's awesome is your data is never revealed. The only algorithm happening is a threshold saying, is your credit score above this amount or not? If it's above this amount, the Snap generates. If it's not, the Snap does not generate. Once a snap is generated, this is a view in the console of what it would look like. Obviously, to the user, this is a blob of text that they wouldn't see. They would simply see a confirmation that their text, their actual snap proof is generated and their credit has been checked. So once that is checked, we simply will now upload it to the Mina blockchain. So by signing a transaction with our wallet, it's written on chain on Mina, and that talks directly to Teller. So the proof itself is then drawn back into Teller and downloaded, where Teller now talks to Figment. Figment is one of Mina's data providers that is connected to the blockchain. And we ask Figment, hey, is this proof that the user submitted real? If Figment gets back to us and says, hey, we looked at the blockchain, or here's the data from the blockchain, and it does turn out that this proof was written on chain, Teller adds a green check mark and says, hey, this is the user's proof that their credit score was above the threshold for this type of risk assessment. Everything else now in Teller happens in the casual flow of any other borrowing process, be that DeFi or borrowing flows that you've seen in the traditional space. I'll simply request my terms, and this runs the entire risk assessment locally. So there's two forms that in which this can be run locally. If the algorithms are open source and those developing the risk assessment algorithms are open to having the users run it on the local machine, the data will never leave the user's browser. A snark or proof will be generated that the user did run this data, and by running this risk assessment, they now have loan terms. So the numbers here, because this is a demo, are not exactly correct. However, you can see a very low daily interest rate, yearly interest rate based on the loan size and how much will be owed. What's really exciting is that we'll be offering the flexibility for those developing risk assessment algorithms to have this run on a user's browser locally, or have something more controlled through a validator network. We perceive different companies or today's fintech applications to really want to have some type of privacy surrounding risk analysis, as this is one of their big moats. Those type of companies would be running validators where the information would run through a type of secure enclave, and Mina's data and privacy would be intact. Likewise, all the other open source protocols or more DeFi native projects may have risk assessment that they produce that's run locally on the user's browser. So now that I have my terms, I will accept the terms. This gets written directly onto the Ethereum blockchain as the proof that was generated is spoken back to. Once it's written on chain, now I actually have my loan terms as they were agreed upon by consensus. So all I have to do is click request loan, and that DAI will be in the wallet that I'm able to use the funds within. Request loan, and my loan is dispersed. We're super pumped about this integration. This is pretty much the high level flow of what a user will experience. There's going to be a lot of interesting data points that I think can be extrapolated from this. Obviously, credit is the first, and it's super interesting for those in the US. For those not in the US, we're definitely working on ways that we can incorporate new types of information globally, as well as on-chain sources like NFTs, repayment history, lack of defaults that can start building kind of this access to credit, both from the starting point of people in the traditional world with credit scores and with those who may not have them or want to stay more DeFi native or anonymous at the start. With that, I'll let Emre take it all from there.
This is so awesome, Ryan. Thank you so much. I remember looking at some of the initial DeFi protocols back in 2018, and it's, I guess, proof to all the crazy design work that's gone that in 2021, DeFi is what everyone is talking about. And I truly believe this is going to be the next chapter, because right now we're just limited to this crypto bubble, and we're not talking to the rest of the world. So let me maybe zoom out and share a bit of that vision on how we see all of this uniquely enabling the next chapter of DeFi, or the private key to mass adoption. So I just want to zoom out and take a look at, this assumes DeFi, but it can be generalized to any sort of use case on any blockchain. What the stakeholders that we have, right? So at the top, you have all the users that are interacting with these services. In between, you have end user applications. So this is the actual front end that users are using, such as what Teller has in the website example that you showed, to interact with these services. In between, you have the liquidity protocols, These could be some stuff unique to the end user application itself, or generalized protocols such as a compound or maker or many others, right? And ultimately, the logic of these protocols get settled by the blockchains. So for example, Ethereum, which is now where a super majority of all the DeFi applications reside on. So this is a great kind of like this mechanical picture of what's going on, but we have a problem. And the problem is that everyone has to put a lot of collateral onto this system. And what ends up happening is that the dollars that people are putting into this protocol are the only ways to get access to things like unsecured lending, or in this case, secure lending, or trading, or many of the other use cases. So we started thinking, okay, how can we get rid of these, not rid, but like how can we ensure that not every user has to be rich to interface with the protocols? Because let's be honest, that's not how the real world functions. The reason financial services and other use cases are so big is it enables, to some extent, many other people who not necessarily don't have the riches to be able to participate. So what the normal world does is gather a ton of personally identifiable information, right? So if you look at any bank or any other sort of financial service provider in the usual world, they have a ton of information on you. This could work, in the blockchain setting as well. But then the issue that we're all going to run into is all this PII gets ported onto the underlying blockchain, which, as we know, are public. And that obviously is not going to work because no one was going to put that much private information onto these public blockchains. And that's why we have not, to date, I guess until today, literally, seeing these types of unsecured lending use cases be enabled. So what if we could put some locks onto these user flows, onto how this private information flows through? We could put it between, let's see, my slides are not, there we go. We could put it between the end user app and their liquidity protocols. And we actually have an example of this today in the crypto world. This is, for example, think of the Coinbases or the Binances of the world who provide some sort of financial services at times. But what happens there is you end up with the same infrastructure that we have in the world where these large end user application providers hold all of the data. So we don't want that. What if we put the lock between the protocol and the blockchain itself? Well, this also isn't that different than the usual world that we live in, because you have all the governments providing access to things like the international settlement rails for wires and whatnot. And again, this causes a lot of problems, a lot of efficiencies, and a lot of expensive services. What if we could put these locks between the users and the entire system, such that all of the users have full control over all of their data at all times, and they only share what they are requested to be shared by the end user application in a private way? And this is the example that Ryan showed with the Teller integration that Mina and Teller have done, where the user is only sharing with the end user application a fact about their credit score. And this can easily be adopted across many different use cases. This isn't necessarily limited only to DeFi, because as Izzy and others shared before in other sessions, when you zoom out, what snaps do is work similar to dapps, but add two specific features. One is that they can prove facts about a user's data without sharing the data itself. And then number two is universal trustless oracles, in the sense that you can pull any data from any website that has an HTTPS signature on it. So what this, as Ryan said it very eloquently, does is it transforms any website that's accessible by an end user to an API endpoint, which isn't something we have right now. So scale this out. There's many examples of what can be done. Unsecured lending, such as what we showcased. Think of how the power of Chainlink and it being done in a private and decentralized way. It could do employment and accreditation verification. You could do private elections, right? Think of all the issues that governments around the world, recently the US elections, ran into. What if those could be done in a systematically provable and private way? So we're super, as you can tell, excited about what Snaps unlocks, not just for DeFi, but across the entire dApp landscape. So yeah, this is kind of the vision that we have been envisioning. And I guess I believe this is the end of our content. And since we started early, we have a decent bit of time. So maybe we can answer some of the questions we have. Let's see, Ryan, was there anything else you wanted to add before we hopped on to the questions?
I think there's a lot we can talk about. So more pertaining what the audience wants to know.
Yeah. All right. So one question I see that is not answered yet is, guys, does it mean that a part of Teller will be affiliated with the Mina blockchain? Currently, Teller is on the ETH chain or the Ethereum chain, if I'm not wrong. So Ryan, how would you respond to that?
Yeah, absolutely. So I think there's a world where, users in crypto are viewing layer ones as competitive. But the real answer is that each type of blockchain has to fulfill a specific purpose. Ethereum has been around for some time and has kind of shown itself as the DeFi narrative, the DeFi leader to date. But other blockchains, such as Mina, focus on privacy, such as Filecoin, focus on storage and data, are going to persist and become very successful in ways that Ethereum shouldn't. Ethereum is meant as a space layer for finance, and we, of course, utilizing the snap proof, are directly interfacing with the Mina blockchain. So there's a part on Teller on Ethereum, there's a part of Teller on Mina. And as bridges get built between these type of layer ones from a transfer of value standpoint, that's when we really see exciting things happen. Whether an unsecured loan is taken on either chain will be eventually non-relevant. It will be that there is a layer 2 likely on Ethereum, there's private data that's being proved on Mina. Where the money comes, it will really flow. So that real end users, and you can imagine fintech companies that are building on top of this tech stack, their users are simply going to see money and risk assessment and data and be happy with the privacy aspect of it.
Exactly. I think one of the reasons that we're so early in crypto right now is everyone has to know what's happening with the blockchain. The end user has to take the entire burden of all the UX issues. But think of the internet world. You don't necessarily know the underlying protocols and underlying database providers, et cetera, that are all giving you the simple service that you want to use, whether it's to take a photo or do a Google search. And that is another benefit that we, when we were thinking of snaps, wanted to provide to the rest of the ecosystem, which is that the dApp developers such as Teller don't need to make the decision of like, okay, like I want this benefit, but do I now have to move my entire application stack over to this new chain? It's a big risk. It's a lot of work. It's expensive. But thanks to, over the long term, thanks especially to the fact that Mina is the super small succinct chain, can easily be verified on other chains, right, such as Ethereum. And in fact, as you may have heard in an earlier session, we are collaborating with the Ethereum Foundation on enabling a trustless bridge that truly enables anyone to carry over information between Ethereum and Mina, and in the future between other chains. So that's a very powerful vision. Let's see. Another question is, in which way are you in collaboration with Finance 1.0 institutions, and how did you manage to build business relation with them? So maybe I can take an initial go at it. And this is maybe not a very exciting answer coming from a business development professional such as myself, but what makes my life easier is that we did not have to build any sort of partnership with Credit Karma or any of the other institutions that might power these use cases in the future. The beauty of snaps is, and what our cryptography team was able to figure out by proving TLS signatures inside of a snark proof is that any data that any end user sees on their browser is accessible. It's all fair game. We're breaking the silos. So this is going to have a lot of implications for a lot of future use cases, but think about what you can do if you can access all this long tail of information on the web, right? Whether it's credit score on Credit Karma, or your credit score in a smaller country who might have a totally different structure, or the number of Reddit upvotes on an obscure subreddit thread somewhere, or your Twitter follower count. Everything is on the table. So that's why we're excited about all these amazing use cases that this might bring, and empower service providers such as Teller, who want flexibility, right? They want to serve what's best for their users, and hopefully, snaps can enable and open up all of them to developers such as Teller. I don't know, Ryan, if this makes you think of future directions for Teller.
I think you coined the term. It's a long tail of data, and that's what's really interesting here, is that Mina opens the floodgates. Because so people who are built on top of Mina's tech stack, that protocol layer like us, we did have to establish those initial connections. We have an integration with Plaid, which then gets us to, as the comment mentioned, the Finance 1.0 institutions, connecting banks like Chase or Bank of America into the protocol itself. So there is kind of a maneuvering of, this blending of the two worlds. And I think one of the big problems that fintechs today face is there's no global access to data. When they are looking to expand into new regions, it's very difficult because there is no streamlined credit system. They would have to bring up a new department in their company and have to understand and download a vast array of information that is really only known locally. As Emre said, it could be even like as local as a Reddit subchat or a specific community in a country around the world. So what's amazing that Mina brings is this global data set. And with Teller, we're offering this functionality for that global data set. While with Teller, we have to work with those Finance 1 institutions, 1.0 institutions. As we start leaning into the long tail of data, those direct business development relations are not as relevant as you start getting into points on Reddit or GitHub activity. Things that do show value in communities, and namely online communities, which are very interesting, but wouldn't necessarily have the normal paywalls that you do with data in regards to centralized applications. So this kind of leads into one of the questions, if you don't mind me answering, Emre,
Please.
is why implement credit scores into DeFi? The question here is that, in third world countries who don't have good banking history, they don't necessarily have a way to port information into crypto. The aim should be global. And I think this idea of the long tail of data absolutely follows through to that vision. The idea that you don't need to go as dense as actual credit scores in a specific country, but the data could trickle down the list because everyone has some access to a mobile phone. If you don't have access to a mobile phone or any internet, you're likely not connected to DeFi yet. But even those, I think there's 1.7 billion that are unbanked today. Even with that, majority of the world doesn't have access to a seamless global kind of or nationwide credit system like we do in the States. So we believe that there's going to be kind of this overarching narrative from data that's very dense and rich as credit scores and banking information to the more long-tail data and then eventually to on-chain actions. This is something we're experimenting with NFTs with currently with our fortune teller sale of NFTs, that you can actually use NFTs to get access to credit, start building a credit information or credit history based on on-chain actions. But really to get access to this credit, it's a combination of all these different type of endpoints. Because who is an individual in Web3 is figuring out what is an identity in the digital space. It's going to be this combination of data, whether it's from a bank, whether it's from GitHub, whether it's from your use on-chain with NFTs or other assets. And then we start identifying this wallet is mapped to these compilations of data which mean an identity. And that's how we start building a unique credit system. But it will take time. It's going to take integrations, partnerships, and privacy at its forefront.
Yeah. And I think one thing I like really about this vision is that it doesn't necessarily require us to all build like an entirely new parallel system from the ground up. It acts as a bridge. Like just to give an example, Ryan, off of what one thing you mentioned about other markets or countries who may not have good credit scoring system. Just personal example, I'm originally from Turkey, and Turkey had its credit score system developed in the last 10 years. So it's one can say it has some level of development, but it's not at the sophistication level where it can allow global entities to start tapping into all the nuances that have to come with a sophisticated credit scoring system. However, what this allows is for service providers such as Teller to start taking bits and pieces of information. Okay, here's a vanilla credit score system that the Turkish authorities have developed. Let's get that data, because again, the user can log into their account and share that data with a snap. There doesn't need to be any sort of sophisticated partnership that needs to be developed. Or you can get other sorts of identification or web style authentication, such as the user's Facebook account or Twitter account or the reputation they may have built there. And you can start doing their own, as they say with Ethereum, DeFi is all about these money Lego pieces. Now we can finally have private data Lego pieces and do lots of interesting stuff with that. And I think, at the same time, by not compromising the user's privacy, because as much as the internet opened up in terms of what people can do with data, it compromised all of our privacy and private information. which is also one thing that we're going to be discussing in the session after this. Yeah, maybe Ryan, one question for you. Is Teller the first DeFi project that will have NFTs with utility?
So we may be the first one live with it, but Uniswap v3 did come out with non-fungible tokens with utility. And Uniswap LP receipts will be usable as non-fungible tokens. But with our sale, we do see ourselves being the first lending market and potentially soon the first live DeFi project with real use case and utility of NFTs. What I think is really interesting is when we start combining NFTs with data, and this is something that Emre alluded to, which is in order to have technology in DeFi and blockchain be utilized by the banks and fintechs and actually integrated, we need two things. One, the money markets, which DeFi already has, two, the data, which DeFi is receiving. Either of those by themselves could be integrated by a fintech institution. All of a sudden, the combination of them start to rewrite the entire underlying thread of our financial system. And NFTs are really, really unique because interesting data can be stored on them that's specific to the ownership of that non-fungible token. So with Teller, we're seeing NFTs as that kind of convergence, the convergence of data and the access to a money market. It's kind of that middle ground. And that's what the NFTs that we are currently selling. You can go to Teller right now if you want to see what they look like. They're pretty cool art pieces. That's what they'll be doing as utility. They'll give you access to credit to take out loans. And as you start interacting with the protocol, connecting more data points through Mina, being a good actor in the system, you can build credit that can be attributed to an NFT. So there's really interesting use cases that go far beyond just the underlying artwork or technology or kind of the hype that we've seen from NFTs in the mainstream today to genuine utility in finance in DeFi that something like a bank could understand and start integrating.
This is so interesting and exciting, and it's kind of ironic now that I think of it. When NFTs first came out in 2017 with CryptoPunks and CryptoKitties, I think I, myself included, we all got excited and say, wow, this is going to be like in games, like all the game items we're going to have are going to be tradable. That hasn't happened yet, but in another way, it's gamified, or it's helping gamify DeFi and add other types of elements. So very interesting twist in the narrative, I guess.
I think no one expected the gamification in DeFi that had occurred in the last year.
Oh yeah, it's been huge. Maybe let's take a last question, which also helps us zoom out a bit more. In which sectors of the real economy will snaps be most needed, in your opinion? So Ryan, do you want to start with that? I know it's a big question, but I'm very opinionated on this, so
yeah,
I'll start with the more objective.
I'm backing up here to scope, not just DeFi, but over the next 10 years. So it starts, and that's where we're at, with the most sensitive information. We're only talking about finance today because it's focused on DeFi, but healthcare and health information is super, super sensitive. HIPAA compliant laws are stringent. Data is really, really kept private in that type of sector. That government-related information, like DARPA-related information, and your personal identifiable information, be that your fintech info in a bank, your credit information, SSN. These are super, super high-value piece of information that should absolutely be just privatized. The user should know it. The user shouldn't have to share it if they don't want to. They could share an aggregation of it or a true or false score of it. For example, in healthcare, it could be something like the aggregate information that you have over the course of some amount of time, but the physician or the hospital won't get access to this huge data set that you've collected about your health. They only get access to specific answers that they're asking questions about so they can better suit your medical profile. Now, how does this tie back to DeFi? All of these sectors tie back to money. Money is obviously the underlying root of how an economy functions. And healthcare ties back to insurance, which ties back to money and DeFi. Your private data in healthcare should always be known to you. It shouldn't be known to the insurer, but insurance can start making estimations and analysis based on that data. We talk about fintech, that's credit and what we've gone over today. Governments, this is voting or different systems that can be maneuvered, whether that's in one local jurisdiction or regarding multi-party jurisdictions, where two governments may not want to exchange the data, but they can prove that something has happened and money can be exchanged based on that proof. So there's really big visions of super sensitive and important information that will contribute to genuine real economies in the next 10 years. There's a whole nother list of information. I don't know if we have time to go into that, but as Emre said, gaming is one of those worlds. But it brings it back home when you talk about how money and how governments interact with different systems.
I'm assuming everyone follows Mina by this point. So follow Teller, follow Ryan, and look out for when they actually put out the Mina integration, and go test it yourself. And other than that, Ryan, thank you so much for being with us. This is incredibly exciting to finally be able to talk to the world about.
Absolutely. We are super excited. Thank you, everyone, for tuning in. Appreciate you having me, Emre.